Hey guys, what is going on? Welcome to Smart Money Concepts episode 5. So excited to get this started. Happy New Year to everyone. I know it's February, but haven't spoken to you all on YouTube since 2020. So 2020, it's been a tough year. We're going to try to put that year behind us and focus on the next year. Let's make this one the best year yet. 2021 trading year, we had a lot of great setups, a lot of great trades coming to fruition the start of the year. So let me go over just a few pairs with you guys. I'm going to go over 8. AUD JPY, Euro AUD, Euro JPY, Euro NZD, GBP Chef, GBP JPY, GBP NZD, and GBP USD. And I just want to say this in advance, excuse my voice, I am a little sick, so just bear with me here. So AUD JPY, I'm going to start on the higher time frame. And really what the goal of the Smart Money Concepts videos is just to give you a brief rundown of our strategy, kind of how we look for entries, the overall concept that we use to trade. Obviously, the in-depth details and the precise entries and the confirmations are only shared within the course and within the VIP service. So this is just giving you a basic rundown of how we trade, to see if you're interested and if this is the type of trading for you. All right, so AUD JPY, obviously, higher time frame, we are in a major uptrend. That you can just see with the naked eye. Okay, major uptrend here. We are above all EMAs. So most recently, this was our most recent swing point. Now, let me kind of divulge into what's going on within this sort of level. Okay, so we had this most recent demand. Okay, the last selling volume before the big push up here. Okay, we swept liquidity. We swept liquidity here. These equal lows with this wick coming into this prior demand level, as you can see. Okay, so then what do? We pushed up, we mitigated this demand, creating a new demand level. All right, pushed up again, creating imbalance. We did not come down and test this level, which makes me think that we are eventually. All right, so what do? Higher time frame. Let me go to the 4-hour here and show you what's going on. So 4-hour time frame, we are making lower lows, lower highs, as in a counter trend pullback. So a trend down on the lower time frames, a pullback on the higher time frames. Obviously, you can see with this swing point here, this lower high, we did not breach structure. We made a lower low, lower high, we did not breach structure. Lower low, we finally did here, a higher high. We closed above the most recent swing point. Okay, so within this candle, this 4-hour down close candle, what happened within this 4-hour down close candle? What happened on January 28th at 1 o'clock in the morning, Eastern Standard? Well, London session within this candle is a 4-hour candle. So London session open, we swept these equal lows here, liquidity. That's why we create liquidity before coming into major areas of interest, because the banks, they love to build liquidity in order to take retail trader stop losses, because they know they have to come and mitigate their positions here anyways. So we push down strongly within this demand. Okay, we come into the imbalance, come into the last sell before the buy, which mitigated this demand as I just showed you. We came into that and we created our higher high. We get broken counter trend structure, as you can see. You can see the counter trend within these moves. Okay, so now what do? Well, now here's the tricky part. This was a major buy to sell. Now, do we think this is going short? No, because we were on a higher time frame uptrend, but we did sweep liquidity with one candle, and we did not maintain above the previous swing point, which made me think that we could potentially come a little bit lower before then blasting off to the upside. However, lower time frame suggests that when we came into here, we made a lower low and then another lower high. So we started to create this pullback sort of move. So I did not place a limit at this level with this blue line right when we made this down close move. I waited, and I could see that we were forming lower lows, lower highs. So I thought, okay, well, this is simply just going to be a pullback for a continuation to the upside, which is exactly what happened. We hit this level to the T, which happened to be the 4-hour open. You could have gotten a more precise entry, but I'm not going to go into that. Even with this entry, we are looking to target higher time frame 85. This is a swing trade, 540 pips for a 1 to 18. But with our proper entry technique and lower time frame play confirmation checklist, there are other things you can look at. Obviously, we're not going to describe that here. It's for VIP and the course only. Obviously, 79.6 psychological round number, and within the lower time frame precise entry confirmation, we could have gotten a lot more than a 1 to 18 risk reward, probably around a 1 to 30, 1 to 50, in and around that level. And let me just say congratulations to Jimmy. He had just hit his first 1 to 50. Congratulations. He's been with us for quite a while, and he has now finally started to grasp this. And it's just been taking off for him ever since. He's taken the course. He's loved it. So please check out our website, arielfxtrading.com, and you can see all the testimonials there and take a look at our content. A lot of it is free, just like we're doing here, our YouTube videos, Smart Money Sundays, etc., etc. But within the highly in-depth, extensive version of this strategy, we do have courses and VIP services as well. So congratulations, Jimmy. Keep up the good work. So that is AUDJPY. That is just one trade. We are currently up, I believe, right now, about 4% on this trade, about floating 4%. So we're going to keep a tally of this just to see what we come up with at the end of this video, how much percent we could have made with just these 8 pairs. So far, AUDJPY, we have had 4%. Okay, so next one, Euro AUD. Now, Euro AUD was not really the conventional type of trade. This was more of a counter trend trade, but let me go into it. So obviously you can see here we are in a major downtrend, but so far, lower time frame, we are in an uptrend. Okay, you can see with the higher highs and higher lows. However, we do have equal lows right in here. Okay, we did create equal lows, so those will be taken out eventually once we break structure back to the downside. It could happen now or it could happen later. Not quite sure yet. We haven't really gotten all the confirmations yet. But what really made me want to look at this level in and around, 1.588, 1.589 was because we have these equal lows here. And if we were to go long, we probably needed to come down into this last point of demand here before blasting off again. So we were creating higher highs and higher lows. This previous demand was hit with this move here, with this wick, and then we pushed up and we retapped this level with this within this doji that mitigated this demand level. As you can see, we created another demand level over here, but in the meantime, we created equal lows when we were trading in and around this level. So let me go into a lower time frame, around the 15-minute. Let me show you exactly what we're looking for. All right, so we had this previous point of supply. I'm not going to go into why this is supply. This is just free content. But anyways, this form of supply, we swept liquidity here, 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 all the way up. Many people were thinking break of structure. Why wasn't this break of structure? I mean, we created a higher high, right? Well, why wasn't it? Well, there's a lot of factors that goes into it. I'm not going to discuss it, but we created equal lows. That was one point. Fast run on liquidity coming into this point of supply, seeing a reaction from it, and it's not just seeing wicks. Yes, that's part of it, but it's also seeing what happens on lower time frames within this point of interest. All right, so we didn't take a trade here, but this is what we discussed in VIP. We sent it out within the analysis group chat. 1.5890. We would have had just a few pips of drawdown. But let's just say you took this trade. Let's see what we could have gotten into. Okay, so we probably would have had 42 pip stop, all the way back down to the open of that level, 1 to 4.5. So we're just going to go 4.5 here, and let's just say, excuse me, let's just say we were floating 4.5%. Okay, I am looking for longs in and around this level because this was the most recent demand that reacted off of this level here. All right, we did hit that pretty nicely. So what I'm going to be looking for is probably a sweep of the low here coming into market open potentially, and then we may see a rise. Hopefully we can get a break of structure because we do have equal highs within here. If we can get that break of structure, obviously a pullback for continuations will be expected. All right, but we are looking very, very bearish right now on this, and we could easily push down even lower and just take liquidity, and this could be the overall pullback. We could make a lower low now. We just need the confirmations come Sunday and Monday. Okay, so that was 4.5% if you did take the trade. Next one, Euro JPY. So with Euro JPY, it's quite interesting. Let me go to the higher time frames here. Euro JPY, we understood that we were higher time frame bullish. Okay, why were we higher time frame bullish? Well, We can see in here that we swept liquidity. This is a higher time frame move, kind of created the inverse head and shoulders pattern here, had equal highs within here and here. We pulled back within this point of structure. Obviously, this is around that same level where this kind of conjunction region is, what the last selling volume is. All right, not going to go into the nitty-gritty details, but anyways, could have taken an entry off of somewhere in here for a long opportunity. Anyways, we created a higher high. Okay, we created a lot of liquidity within this region of price. We pushed down. Where did we come into? We came into the prior high right in here of the last selling volume. Reacted off of it nicely. Started creating higher highs and higher lows ever since. All right, now we did take a short on this to begin the week, but this, obviously knowing that we were in a higher time frame uptrend, you still should be looking for buys. But if you do have more room to go to the downside before potentially buying again, then we could take a possible counter trend play here, which is exactly what we got. We wanted to buy price around this level, 125.935, higher high, higher low, higher high, higher low. We swept liquidity with a strong move coming into sort of this demand level right in here to the T. Okay, we pushed up, created that higher high. Now we are in this pullback. Now it's okay to take trades off of these swing points as long as you have proper time of day and the correct type of setup. So what I mean by having more room to come to the downside here is that if we took a trade within this level, we have more room to come to the downside. Now, if we were to have done something like this, if we were to have created like, I don't know, equal highs, we purged the equal highs, we fell down, we pulled back, well, we already hit the higher time frame level of interest. We should be looking for buys now and not necessarily mitigations to go short, because we don't have any more room to go to the downside because we've already hit this higher time frame candle of interest. So this is why top-down analysis is very important. Now let me go into the lower time frames here and show you guys what exactly VIP caught this week. Happened on Monday. We can see here that we had the Asian range within this region. Okay, this was the Asian session. We kind of just chopped around. We had one final push to the downside, enticing sellers into the market around 2 in the morning. London session open. Okay, 2 in the morning Eastern Standard Time. The London session opened. We enticed sellers into the market. Okay, hit sell stops. We came back up, took their stop losses from sells, hit their buy stops, and then we swept back to the downside in the correct direction of trend, taking the buy stops, and anyone who bought within here with this breakout took their stop losses when we got back down here. Okay, so obviously we were in this kind of corrective phase, as you can see here. So it is okay to potentially take a lower time frame intraday scalp to the downside here, because we do have more room to go to the downside. So where did we get in? We got in, I believe the entry was around, let me just find the precise level. I think it was, yeah, it was right in here. Okay, perfect. It was right there, 126.950. Make that nice. We got in there, and we also got in again. I didn't send this out as an additional entry, but I did send it out as analysis. The imbalance fill with this last buy to sell move came into that nicely again. All right, so let's just mark this off. Let's just see what we could have caught. Now, our overall target on this was 125.936. We didn't quite get that because we had news that came out and we had pushed back up, but I did tell the group to take more partials down here because of the NFP sentiment that occurred. So we pushed down our max profit, could have made it. We were up a 1 to 9 when I told them to take partials on that one. So 9% on that one. And then let's find out what we could have gotten with this one here. This one was just above the high, 16 pips, just about. We were up about 1 to 4, I should say 4%. So that's another additional 4% on that one. Obviously, we didn't hit our overall level. I really wanted to get into this level. I was hoping that maybe price would maybe have one last final push to take all this liquidity and then have one more fall back into here, and then we would see that rise. But didn't get that price action. It is okay. Maybe we could potentially see that here. Who knows? We still have not broken structure to the upside with this structure here. Once we break this level, then we're probably not going to come below that level. But since we haven't yet, this could be a push, a pullback, another push, and then we could see a rise up into that level. So I'm still going to pay attention to 125.935 here. Um, but so far, overall, we are in an overall uptrend. So continue to look for buys. All right, Euro NZD is next. So Euro NZD, obviously continuing with the trend, guys. The trend is your friend, believe it or not. Okay, I know so many people love to take these counter trend moves. They love to find areas where price may bounce and reverse overall, but in all reality, it's very hard to identify the tops and bottoms of these trends, guys. So really, just trade with the trend, find setups in the correct direction, and more than likely you will succeed. All right, now let me go to lower time frames here and show you what's going on. So within this sort of level, what do we have? Well, we had this mini downtrend here, lower low, lower high, just lower time frame. We had the final sweep, and then we fell again, taking all this liquidity. Okay, kind of a similar deal here. We pushed down, lower low, lower high, finally had that overall sweep coming into this supply level. Why wasn't this a supply level? Well, it was, but did we have a reaction from it? No, we did not. We didn't have the confirmation to go short. Did we have a confirmation to go short here, lower time frame? Yes, we did, within this sort of region of price. You could have placed your limit order here or here. Either one wouldn't have mattered. Obviously, stops above the high here, so regardless, you still would have been in profit. But for a better risk to reward, we have higher time frame and lower time frame confirmations within this level, so we did take a short. Or at least I did, um, within that level. This was January 19th. This was like the day after we started trading, because we didn't trade the first half of January just because, low volume, low volatility to start the new year. So I did personally take this and did have a nice risk to reward because of it. Let me just show you what we could have gotten. The entry was 1.707 precisely. Stop loss above the high. I think it was 60 pips. And then we fell, creating equal lows right in here. I bagged out at a 1 to 4. So 4%, not too bad, not the best stop loss in the world. But anyways, we could have seen the same thing here. After seeing a lower low formed, lower low, lower high, lower low, lower high, and here, what we could have done was seen this big impulsive move. Don't be scared by these impulsive moves, guys. As long as we stay below this level, if we were to have broken this level, then yes, we were to have broken structure. We will be going long, but we didn't do that. Excuse me. We came back into this prior supply level, okay? Prior structure. We can see the high here. We can see the lows that were formed. So obviously in and around this level, 1.7000 was a nice level of interest for me to go short, sweeping all this liquidity before having that push to the downside. So a liquidity run coming into a higher time frame level, push down, just like we did here. Liquidity run coming into higher time frame level, push down. Liquidity run coming into, well, we really didn't come into anything significant here, but we did push down overall direction of trend, right? So could have gotten an entry here. This would have been a little bit bigger stop loss. Would have been about 70 pips. You do want to put your stop above the high here, just to be safe, because you could come into sort of this supply level as well. And then we had a negative 27 move fib extension. So we would have gotten just about a 1 to 5.5, or excuse me, 1 to 4.5 here. So 4.5% with that one. So you can see sort of how this stuff works, guys. It's not all about just sponsor candles and imbalances. I mean, that plays a big role in this. But at the end of the day, it comes down to what the basic concepts are describing. What is it shouting out at you? Has liquidity been taken? Where are these higher time frame levels? It's not all about the candles of interest. It's about price as well. What's the price, and where are the higher and lower time frame supply and demand levels? All right. So we did come back up into that, and we did have a major fall to the downside. We actually came lower than our take profit, which is good. But anyway, it's 4.5% there. Next one, GBP chef. So GBP chef, across the board, the theme for GBP was bullish. Okay, so we do want to be looking for overall pound strength. As you can see, we are in a major uptrend. This was a push up. This was a pullback. Obviously, we had a little bit of equal highs. We did take liquidity. So continuing, we broke structure, counter trend here, pulled back. You actually could have gotten an entry in and around this level here. But anyways, continued up, okay? So my main focus was in and around this level. This was, sort of the beginning of January, or mid-January when I started trading again. Okay, so what did we have? Well, I wouldn't have taken a trade off of this level here because this is just, one demand level out of many. You could have had one here, 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 whatever. All right, but we did have a reaction off of that level, and then we did break structure counter trend. As you can see here, lower low, lower high, lower low, higher high. Okay, we cleared that level. Now we know we're not going to go below that level. We can pull back, look for entries in and around lower time frame demand levels. Okay, but it's not as simple. It's not that simple, guys. It's not just, oh, okay, well, what's the last selling volume before the big move to the upside? I mean, yes, that is could be a big part of it, but you have to be able to confirm this level. Why was this confirmed? Well, again, I'm not going to go into that because that's for course and VIP students only. But we'll just give you a higher time frame rundown of what's going on. So I guess you can say, yep, last selling volume before the big rise came into that level to the T. I'm just going to get rid of this box to show you. We did sweep the low in here, sell to buy, moved up to the upside. Lower time frame. I'm not going to go into the nitty gritty, but anyways, right in here, just let me go bar replay for a minute. 15-minute time frame, sort of forming a Wyckoff schematic. We had the last selling volume here, sell to buy. We did break structure lower time frame, pulled back, but we didn't quite fill in that lower time frame 10-minute demand level here. We did not quite test that. So what made me think that after we play all of this out, I can go to the higher time frames and then play it all out for you guys. We actually did make a higher high from this level, which is very good. Okay, then we came back down. What did we do? Perfect. Spiked into that 10-minute demand. Okay, so just because we're making these fast moves to the downside doesn't mean that we should be looking to go short. This is why if you guys can't pay attention to everything that's going on within a pair, you shouldn't be trading it. Plain and simple. That is why when people look at all of these pairs here, I don't look at all these pairs here. I look at a select few. All right. So if you're looking at 10, 15 pairs, you're not really understanding what's going on. And you really shouldn't be trading Forex to begin with because you're just going to blow your account. I'm just putting that out there. It may hurt some of you guys' feelings, but I don't really give a shit. Some people need to hear it, okay? Some people, trading is not for you. If you understand it and are disciplined, then you can make a lot of money from it, okay? Focus on a few pairs, 3, 4, 5 max. I'm going over 8 here. I don't go more than 5 in my personal life, my personal trading. For my VIP services, of course, I do take a look at more because our students do look at more pairs, okay? But I'm just putting it out there, guys. Really just focus on a few pairs, understand exactly what's going on. Would you have known to take a trade exactly at that level? If you didn't understand this pair, no, you wouldn't have. But I have been following this for a while and know exactly what's going on, exactly right here. So perfect. You could have gotten an entry right in here. Let's just do this. I'm just going to show you guys what kind of percent return you can create within just a few pairs, mastering just a few pairs. Obviously, we have equal highs in here, perfectly equal highs. So I would probably be targeting around 1.22 psychological level right in here. We did not quite hit that, but we were to have held. Let me just make it pretty for you. There we go, 8%. Didn't quite hit it, so we're not going to count it quite yet. But stops were back at break even. We did not hit break even. Okay, why didn't we hit break even? Because we had the demand level right here, the open of the demand. Our entry was here, break even was here. Our entry was there for our second entry. Perfect, to the exact T. Price does things specifically for a reason, okay? It's not just random movements, it doesn't just stop at random places. It comes into levels pretty much precisely because this is how, why would it need to push down anymore if there was no need to? That's exactly what the reason is for. Okay, stops, obviously we're below the low here, below the demand, so below this orange box. And take profit, we're just going to say 1.22, again, just like the other one. And what did we do? We made a move to the upside, okay, very, very strongly. We just go fast here. There we go. Perfect. Did we come up into it? Oh, not quite. Come up a little higher. There we go. Now we hit it. 1.22 was hit. This was a 1 to 16. This was a 1 to 8. So I'm going to write 8%. I'm going to write 16%. Perfect. Okay, next. We have multiple trades on this. We had like 3 or 4 trades. So that was 1. This was 2. And now we're going to go to the next one. All right. I think it was it 30-minute? Yeah, 30-minute down close. Okay, so we had a higher high, a higher low, a higher high. We're not going to come below this level. I mean, most likely. We have to confirm it first, most likely we're not going to come below it. This is why it's just an area of interest. 30-minute down close, sell to buy, took liquidity within here. I made a run to the upside as well. Next, we're going to see what we can find in here. Obviously, that was an entry to the T. Exactly, guys. I can't make this up. I really can't make these levels up, guys. Price happens for a reason. If you don't understand what's going on, either you need to do some more practice or you need to ask yourself, is this really for me? All right? Because, guys, this is difficult stuff. It can be difficult at first. But once you start seeing this and you focus on a few pairs, I'm telling you guys, it becomes a lot easier. Here's the problem with a lot of people. And I don't mean this in any disrespectful way, but people are impatient. That's just straight facts. People want to get rich quick. Like I say, Forex is not a get rich quick thing, but it is the quickest way to get rich. Within the Forex market, many people want to look at all these pairs because they think, oh, there has to be something on every single one of these pairs. Maybe they say, okay, I'm only going to focus on 2 or 3 of them. So they focus on 2 or 3 of them, then they look at someone else's chart and they see, oh my gosh, for this pair down here, we have a great setup. Well, that makes them want to look at that pair more. That makes them take time away from these pairs that they originally selected to begin with. That's the problem. You have to stay disciplined with this market or it will eat you alive, I promise. That's why about 99% of retail traders lose overall in the long term. Only a select few win because of their discipline. But anyways, we're going to continue here. This is a higher time frame move. Overall pullbacks here. We're just going to go to 1.22. We're going to go 1.2250. This is a cycle level for this pair, 1.2250. So about 1 to 7%, or excuse me, 7%, 1 to 7. We are going to scale into this now and see what we can get. All right, I'm going to go down to the 5-minute. So we were creating a schematic within this level. We can see the confirmation, sort of confirmation. This is one of the confirmations. Equal highs. All right, before the schematic is complete. We came down our spring, selling climax, secondary test, our spring once we finally broke structure, which we did finally in there perfectly to the T. That was a level of interest with the spring that we came into with our original entry, our 30-minute down close candle way over to the left. We created this demand level, okay? Sell to buy, all the last selling volume came in, this price came into this level, creating a new, kind of choppy move. Last selling volume, more of a demand level indecision, and imbalance play here as well for price to come into. So where would we have entered? Well, we would have entered right at the wick high, our inefficiency fill, gotten a 8 pip stop. Let's see what we did. Came back down to the T, had a little bit of drawdown, not too much. But then what did we do again? Created another piece of demand, less selling volume in here. So we came into this quite strongly, had a reaction, pushed up, pushed back down just a little bit more, and then back up again, creating a newfound demand level. So where is our higher time frame play here? 1.2250, perfect. 1.2250, okay. Let's call it 1 to 12. I'm not gonna, I'll be transparent with you guys. 1 to 13, people will say, oh, it wasn't a 1 to 13. Well, yeah, it wasn't. I'll call it a 1 to 12 just for those people who want to say stuff like that. So anyways, push back up. I'll even draw this up for you. Our new area of interest. Right in here, another level. This new demand. We didn't tap it. We came down, did not tap it. We have imbalance here as well. I'm going to put my stop loss right there. 10 pips, 10.5 pips. Hopefully we'll come down and see it soon. Go to the higher time frame to speed it up. But you can see, just like, if you just pay attention to these pairs, guys, you can see the precision within them. Let's see if we come down. Oh, there we go, perfectly. Not quite to the T, but we didn't hit our stop. All right, 2250 again, higher time frame. And that is a 1 to 9. All right. Now we're going to zoom out a little bit. Another entry. I just went to the higher time frame, 1.217, imbalance fill. Wasn't quite the imbalance fill, but this is a psychological level, so I'm going to go based off of that. Did we hit it? I don't believe we did. Now we did not quite hit it there. But we did hit or take profit here, here, and here. So what is that? We'll just call it 1 to 12, so 12%. Next one, 7%. Next one here, 9%. Okay, and we did send this one out this GBP Chef one, but didn't quite hit it. So it's okay. Some of them don't hit. We just got to move on. All right. But anyways, we see, all these precision moves, these precise moves within the market here, guys. Okay. Demand, level hit, break of structure, pull back, lower time frame schematic, last spring test, pushes down, imbalance fill, demand level, push up higher, take out these equal highs, pull back down, higher time frame pullback within the lower time frame schematic test that again, taking liquidity here. Guys, I can go on for days and days and days. Liquidity run, higher time frame, breach of structure here, break of the liquidity, pull back down. Law of effort comes into play, higher fast move, very slow retracement sort of level, 30-minute down close, took liquidity. Spring formation here, hit it to the T, pull back, push back. Lower time frame, I'll scale in really quick. Lower time frame, break of structure, pull back into lower time frame demand, push up again. So higher high, higher low, higher high, pull back down, take liquidity within this wick. This is just a fake out, or not a fake out, but this is trying to entice buyers into the market. 1, 2, 3 pin pattern, no, push back down into this demand. Inefficiency was filled, higher time frame push to the upside. Wanted price to have an overall pullback to this 1 hour psychological level. Inefficiency, we never got it. It's okay. We move on. We got so much percent within that. Made a lot of money. Next, GBP JPY. Guys, correlation. Perfect. We need to be buying GBP JPY. Unless what? We have more room to go to the downside. Cool. We got that. This was a lower time frame play. Now, you could have bought it within here or here, the last selling volume or the previous high. But did I really want to have a 60 pip stop? You could have. Wouldn't have been bad. But 60, 70 pips, that's asking a lot to take a trade. So anyways, higher time frame, we're in a bullish market. That's easy to pinpoint. Lower time frame, anyone could have said it was higher time frame bullish. Anyways, what do we do here? Lower low, lower high, lower low. Again, similar situation to what we had on, I think it was it AUD I'm not quite sure. I forget. My brain's clogged. Asian range, push to the downside, entice sellers, take sell stops, push back to the upside, take the stop losses, hit buy stop, entice buyers, push back to the downside, overall retracement, okay? Hit the stop loss of the buys, we push back to the downside, we pull back, this is where we get in. That's perfect, that's institutional play, guys. All these moves in here, you gotta be patient, understanding time and price. It's a key factor, it's a key piece of information, it's a key piece of knowledge you need to understand about the markets. It's what we divulge into a lot in the course. Helps tremendously. Stuff happens at certain times of the day. At other times of the day, do you really want to be trading it? No, it's not, because the banks, that's not one of their goals. They trade at specific times, so why not follow what they do? They're the ones controlling the market. Okay, they're the ones taking your stop losses. Okay, they do certain things at certain times of the day because of retail traders, because of what they do, what they react from. Okay. So understanding that will definitely help. So our entry was 143.51, stops above the high here. Let me just mark this off. Had a little bit of drawdown, about a pip or so, a couple pips. I think we had an 18 pip stop. And our overall target was in fact 142.6, but we only reached about a 1 to 3.5. I did tell them to take partials around a 1 to 3. So we'll just say 3%, shits and giggles here. Didn't quite hit or take profit, but that doesn't hit or take profit all the time. And then we had news that came out, big bullish run to the upside, and now we're just continuing, but we do have a lot of imbalance here. We did take out this high here, so I don't expect the price to come back any further lower than this. So what do I expect next week? Hopefully, if we can get a pullback in and around this inefficiency level, to continue taking longs. All right. So that is GBP JPY. Let me get rid of these lines. Next, two more guys, GBP NZD, what's going on? So this was one that we did not send out. I looked at it, I was like, it looks good, but it's, really wasn't, the correct time of day. This was during Asian session. I know NZD is during Asian session, but I really don't like trading during Asian session. I like London and New York the best, but you could have caught a 1 to 12 here. Let's just go over kind of what we were looking at. Okay, so this was a lower time frame pullback type of play. This was just intraday, but if you wanted to create a higher time frame level because of it, it did end up pushing all the way back down. First take profit would have been this previous demand. Second would have been this previous demand here. taking the lows within here, low here, low here, low here, low here, which we did hit to basically to the T 1.888. This was a 1 to 12. So I'm not going to count this one as a part of my tally because we didn't take this one, but that would have been a nice trade, 1 to 12. So lower time frame, just going to quickly go over this. And obviously this push was with news, pound monetary policy that came out. What did we do? Again, I love these type of trades, guys. I love them. Look, we came in. This was a liquidity run. So we had high here, high here, high here, liquidity run. Take all that liquidity, buy to sell, lower low into this sort of level. Okay, doji candle went to deep in pattern, push to the downside, indecision. All right, highs in here, highs in here, highs in here. Run on liquidity, push to the downside, lower low. Where do we need to come into to mitigate? Well, this was first the mitigation point. You could have gotten an entry there, and then the secondary entry was right in there, which we took advantage of. All right. So this was 1 to 12, 17 pip stop, just above the high here. And then we move on. All right, let me get rid of this. So there we go. Hopefully you guys understand what's going on there. Last one, guys, UPUSD. This one we talked about, but I did not send out because of the news. I don't trade NFP, and this did happen during NFP, I do believe. Actually, maybe not. I don't actually know. The entry point didn't happen. It happened during monetary policy on Thursday. But that's why probably we didn't send it out. I was just a little worried about what was going to happen for the pound, pound sentiment going on there. It's kind of crazy, but I guess maybe I should have sent it out. It would have been a nice 1 to 4.5%. Probably would have been up around 1 to 3. Yeah, 1 to 3, something like that. So I'm not going to count that as part of the tally either. But let me just kind of go over what's going on. So higher time frame. I did make a Smart Money Sundays video on this. It was the first Smart Money Sundays video of the 2021 trading year. So if you guys want to take a look at that, I believe it's like Smart Money Sundays 12, 13, or 14, one of those two, or one of those three. So take a look at that. I did speak about it on the first pair that I went over. I went top down from the monthly all the way down to like the 5-minute or something like that. I just balled out on this analysis. It took me a while to mark it all up. But just really quickly, this was our previous point of supply. Okay, we had a lower low, lower high, a lower low. Okay, I'm not going to go into everything that's going on within this order region of price and why we may break this high in here. But if you want to check out that Smart Money Sundays video, it is free. Take a look at it. It's on our YouTube as well. So coming into 1.38, this is the last buying pressure. We could easily come into 1.4. I do expect that. But lower time frame, what do we have? Well, demand hit here, sell to buy, demand, another demand level within this, pushed up, higher high, pulled back, came into that demand with this last sell to buy. I think it was on the 6 hour that we had our entry. Yep, our 6 hour. I favored the 6 hour over the 4 hour because it had no weight to the upside within this last sell to buy candle. All right, it was just basically a railroad. Higher high was formed, equal highs. This is really why I favored continued longs, because whenever we have equal highs here and we're pulling back to a higher time frame area of interest, this will be the drawn liquidity. 1.38 higher time frame level. Won't be looking for shorts around this level. I will be looking for shorts in and around sort of this level here, maybe 1.4. This is a major box. I don't just want to place a trade at 1.38 and have a 500 pip stop. That is the most stupidest thing you could ever do in your life. Could we have a pullback for a re-entry? Yeah, maybe within this kind of imbalance sort of region in here. If we can pull back, we did break counter trend structure. Lower time frame, we'll just go up to the 30-minute. Obviously, lower low, lower high, lower low, lower high, lower low, higher high. We did make that. We have a lot of imbalance, just like we have on GBP Chef, GBP JPY, all that stuff. So could go into this, 50% of the imbalance, something like that, to continue out 1.38, 1.4. Anyways, the 6 hour sell to buy, I'm going to go back to that. 6 hour sell to buy, I would have had a minimal drawdown there. Would be up currently about 1 to 3, about 3%, about a 1 to 3. Overall target 1 to 4.5. So guys, this happens every single day. Okay, all of these trades that I just went over happened before. I think it happened the 18th of January. The first one happened on the 18th. So midway through January, guys, we're not even into the first week, the second week of February. So let's just say 3 weeks. In 3 weeks, I'm going to calculate this for you really quick. All right, I wrote down all of the percentages that we could have caught. So I'm going to tally them up really quick. Just give me a moment. 5 plus 8, 16, 12, 793. 85%, guys. If you guys did take all of this with extreme discipline and patience, you would have made 85% on your return, on your investment within 3 weeks of trading. Obviously, that doesn't happen all the time. I know people miss trades. I know people don't always hold because we take partials. Sometimes we close before. Sometimes we don't catch them all. Sometimes we don't understand exactly what's going on all these pairs. From top down, from the monthly all the way down to the 1 minute. But yeah, what I encourage you guys is if you just focus on just a few pairs at a time, really get to know them, really get to learn them, you will start to see your percentage return increase significantly. That is a little far-fetched, 85%. That's if you did catch every single one of these moves. Obviously, that's not really realistic. I mean, it could be if you actually paid attention to these specific pairs and every single time frame. If you were up at the exact time that these occurred. Usually happen between beginning of London and end of New York. So around 2 or 3 a.m. Eastern Standard to about 1 to 2 in the afternoon Eastern Standard Time. So really great week to finish the week this week for our VIP members. Did about 13-14% with them. That includes all the partials that we've taken and everything. And we are still floating a little bit with some trades. I do believe. I'm not quite sure. I have to go back and check. But anyways, guys, if you have any questions, as always, please feel free to hit us up and ask. We're always here to help you guys. Even if you're not in VIP or have not taken the course, if you just want to reach out and, ask a few questions, we'll still be happy to help in any shape or form. But guys, if you are interested in learning how we do this and all the terminology, all the concepts, and all these confirmations that I've been talking about, if you're interested in learning this stuff, please feel free to hit us up. We'll be glad to get you a part of our course or get you a part of our VIP service. We do have a website for you guys. If you type in arielfxtrading.com, you can see here comes up with our courses, our VIP services. We do have a few discount codes with our courses still available. I know I said that I was deleting them, which I did delete a few of them, but I'll be more than happy to provide you guys with the remaining codes if you guys still want to. So, please feel free to hit us up and, we can chit chat, whatever, about charts, life, whatever. I'm always here to help. So until then, thanks so much. Hope you all enjoyed it. Hope you all took a lot of valuable information and are ready to absolutely destroy it this year. Let's make 2021 the best year of trading we've had and forget about 2020. That's in the past. Let's focus on the future and just kill it from here. Thanks, guys, so much. We'll talk to you soon.